1. Alternative advertisement approach. The user suggests that Algorand should have leveraged its partnership with FIFA more effectively in its advertising. They propose a scenario where football fans struggle with using other cryptocurrencies, like Solana and Ethereum, to get into a stadium due to technical issues or high fees, whereas using Algorand would provide a seamless experience. 2. Critique of current ad. The user believes the current ad was ineffective and nonsensical, even though it attracted attention. They feel that the ad did not capitalize on Algorand's strengths or notable partnerships like the one with FIFA. 3. Perception of Algorand. The user hints at the possibility of Algorand being a venture capital coin, questioning whether its selection by FIFA might be influenced by venture capital interests. They suggest that if Algorand has significant partnerships, it should focus on those aspects in its marketing efforts. 4. Commentary on crypto market perceptions. The user touches on the idea that some people might be delusional in their understanding of the cryptocurrency market, particularly regarding Bitcoin's dominance. They draw a parallel between this delusion and Algorand's seemingly misguided advertising strategy. 5. Mention of Anthony Scaramucci. The user briefly mentions Anthony Scaramucci, known for his positive stance on Bitcoin, highlighting how he frequently promotes Bitcoin on CNBC. Overall, the user is critical of Algorand's current advertising strategy and believes the foundation missed an opportunity to better leverage its FIFA partnership. They also reflect on broader themes of perception and marketing in the cryptocurrency space, emphasizing the importance of realistic and effective communication strategies. Sure, here's a rewritten version of the transcript. In a comedic twist, Anthony Scaramucci makes a cameo at the end, humorously inquiring about joining the Algorand checkout line. For those unfamiliar, Scaramucci is often associated with Bitcoin maximalism, having touted its merits in the past, including advocating for Bitcoin ETFs. His appearance in an ad promoting Algorand, a lesser-known cryptocurrency, drew criticism and accusations of hypocrisy, especially after he promptly tweeted about a Solana ETF just hours after the ad aired. It seems in the world of cryptocurrencies, even staunch advocates can be swayed by financial incentives. Despite the absurdity of such news, it's emblematic of the unpredictable nature of the cryptocurrency space. With each passing month, the anticipation grows for what new developments and controversies will arise. Here's a rewritten version of the transcript. For those who missed it, Litecoin has surprisingly emerged as a preferred payment option on various platforms this year, surpassing even Bitcoin and Ethereum in usage for remittances and payments. The reasons behind this trend remain unclear, as news sources offer no clear explanation. However, unless Algorand aims to compete in the payment space, its absence from this list is notable. Shifting gears, Japanese e-commerce giant Mercury has ventured further into the crypto realm by introducing Ethereum trading services on its app. This move expands Mercury's offerings beyond its flea market platform, akin to eBay. The company's foray into crypto includes the launch of a cryptocurrency exchange integrated with its marketplace app, with Ethereum being the latest addition. This strategy has proven successful, with a survey revealing that newer Japanese crypto users prefer Mercury's exchange over more established platforms. It's an intriguing development, especially for those just entering the crypto space in Japan, reminiscent of other companies like Rakuten entering the fray. In other news, the saga surrounding Tether continues, with many companies acknowledging its popularity despite recent bouts of negative publicity. Over the past few months, there's been a flurry of unfounded rumors and false reports regarding Tether's stability, including fake news from China and comments from Visa and MasterCard. However, these claims have largely been debunked, highlighting the tendency for sensationalized negative news to garner attention. This phenomenon may contribute to hesitancy among investors, who seem more inclined to believe bad news rather than good. Nonetheless, Tether remains widely used and traded, demonstrating its resilience in the face of ongoing scrutiny. Meanwhile, cryptocurrency exchange Kraken has affirmed its support for Tether, emphasizing its confidence in the stablecoin's reliability. Cryptocurrency exchange Kraken has clarified that it has no intentions of delisting Tether, USDT, in Europe, contrary to a recent Bloomberg report. Mark Greenberg, Kraken's global head of asset growth and management, stated on Twitter that the firm remains committed to listing USDT in Europe and will adhere to all legal requirements, even if there are disagreements. While regulations are still evolving, Kraken is determined to offer all relevant stablecoins to its European customers. The false reports surrounding Tether's potential delisting highlight the persistent misinformation circulating in the cryptocurrency space. Despite ongoing scrutiny, Tether remains a significant player, and attempts to discredit it seem to have backfired. This situation underscores the challenges faced by companies and countries attempting to launch their own stablecoins. As Tether continues to dominate the market. In other news, efforts to rival Tether by creating stablecoins have often fallen short, with some already collapsing. Tether, on the other hand, has maintained transparency, undergoing audits of its assets every 24 hours to counter false claims from certain news outlets. Despite attempts to undermine it, Tether remains a trusted entity in the cryptocurrency space. Moving on to broader economic news, Federal Reserve officials have expressed growing concerns over persistent inflation, as revealed in the minutes from the April 30th to May 1st policy meeting of the Federal Open Market Committee, FOMC. The released minutes indicated a hesitancy among policymakers to implement interest rate reductions, given the challenges in bringing inflation down to the targeted 2% rate. However, recent rants and discussions have highlighted skepticism regarding the feasibility of reducing inflation to such levels. With countries accumulating substantial debt, particularly the U.S., resorting to money printing to service these debts exacerbates inflationary pressures. Consequently, it's increasingly unlikely that inflation will revert to lower levels as authorities suggest. These discussions reflect the growing disconnect between official narratives and the realities experienced by consumers, as evidenced by rising prices in supermarkets and restaurants. The rising cost of living has become a palpable concern for many, with individuals like your friend conducting thorough assessments of expenses compared to a year ago. These personal audits often reveal inflation rates far exceeding the official figures provided by institutions like the Federal Reserve. In some cases, the disparity between reported inflation and lived experiences can be staggering, with expenses skyrocketing by as much as 25 to 30% over the past 5 years. This economic reality has significant implications for the cryptocurrency market, particularly regarding expectations surrounding interest rate adjustments. Many in the crypto community have fixated on the notion that market movements hinge on interest rate changes, similar to the attention given to ETF news. However, while interest rates play a role, market dynamics are influenced by a multitude of factors. The recent news suggesting the Federal Reserve may refrain from lowering interest rates this year has sparked concern among crypto enthusiasts. While reassurance would be comforting, it's crucial to acknowledge the uncertainty and complexity of economic trends. Despite the challenges, optimism persists, albeit tempered by the recognition that navigating these uncertainties requires vigilance and adaptability. The cryptocurrency market is often inundated with fear-mongering tactics that suggest specific events must occur for any progress to be made. However, this oversimplified narrative ignores the multifaceted nature of market dynamics. If we were solely reliant on one factor, such as interest rate adjustments, Bitcoin would still be hovering around $6,000. While some banks anticipate interest rate cuts this year, the current economic landscape presents challenges. Despite efforts to stimulate the economy, inflation remains stubbornly high.